Heidi ho, everyone, and welcome aboard. It is Sunday weekly market update. I'm Geoff Pine coming to you live from Tasmania in Australia. And I got to say, it's a bit chilly here in Tassie at the moment. That's why I've got the jumper. It's kind of been a heat wave thing in the rest of Australia over the last week or so, 45 degrees and stuff like that. Got a photo from one of my mates where I used to live in Lightning Ridge, Australia, and he was showing me that they were watering the roads because the roads were actually melting. I've had that experience firsthand, as a matter of fact. Not fun, not fun. And you enjoy the heat, Helen? No, it's just not happening. I'm going to be joined by Alexis very, very shortly, who'll be taking us through some fundamentals. And then, of course, we'll go through the special guest this week. And the special guest this week is Paul Hutton, joining us. And Paul always has some wonderful things that he shares with us, in particular with his analysis on quite a few charts. I'm not sure how he's looking at the market for the next week, but he'll be telling us all of those things. Shukri joins us, of course, and everything crypto is Shukri's main claim to fame, and by gee, doesn't he know his business. He'll be talking to us very, very shortly, around about top of the hour, as a matter of fact. He'll be talking to us about cryptos, and they're very much in the news at the moment with, I don't know how it's going right now, but Bitcoin reaching all-time highs. I don't know if it's come off. I should have looked at that before I actually started to talk about it, I suppose. I haven't got into the cryptos yet, but I think it's probably something that we all need to be looking at. Because it is, well, a contentious point, isn't it? Are we stuck with the US dollar for another decade? Probably not. We might be looking at something a little bit different. Oil and gold, of course, will follow Shukri, our gold proponent and expert. Ainsley will be talking all things gold. That's about 5 past the top of the hour. And I'm not sure if Ping Ni's joining us today, either Ping Ni, our oil trading specialist, or indeed Ainsley, who also follows oil very, very closely. One of those two will be talking to us about oil. And Lloyd of late has been, well, he's a student of the charts, actually, has been for years. And he's come up with following the indexes on quite a few different things, not just gold, not just oil, not just the US dollar, but all sorts of things, currencies in the main, but we'll be joining him as well. And then, of course, it's me. I'll be looking at 4 charts that I normally do each and every Sunday, and that should be good. I did have some good wine, as a matter of fact, Helen. Thank you very much for that, and thank you for the birthday wishes. The birthday was a very quiet affair. As you get up into the stratosphere of the 60s, well, not quite. I'm still on the young side of the 60s, but it doesn't feel that way sometimes, I've got to say. But the birthday was very, very quiet. We did have a couple of wines with dinner, but we had a lovely dinner. Thank you very much indeed for the best wishes. Right, first up, Paul B normally goes through the 6 charts, the Super 6, as Julian calls them. I don't necessarily go through that because I'm pretty much trade currencies only, and I'd rather talk about something that I know well rather than those other charts that I certainly keep an eye on. There's no question. But as far as being I won't even call it an expert, not even close. I'll call it a proponent of those charts. Then you're probably barking up the wrong tree with me. So I won't bore you with all those things. What I will, no, I won't bore you. Hopefully you've got my Forex Factory screen up. And I just wanted to have a review of what happened last week and see if we can actually find any reason that the US dollar should rally in these data reports. The IS manufacturing was a slight miss. I wouldn't think that would be too much of a downer for the dollar, which has been in all sorts, absolutely all sorts. The ADP, or the privatized non-farm employment change, was a miss, as was, of course, the real one, the NFP number, or now NFEC number, which, as you can see here, was a miss. I don't know if they're terribly reliable at the moment, given, you know, the circumstances that we're under. COVID tends to, I guess, skew that in a particular way, and I just don't know that is what we're looking at the moment. I think there's far bigger things to bend the market. In particular, this surprises me. Wages in the States were up. They were predicting 0.1%. Yes, I know, but 0.3 is a little bit of an interesting number. And of course, the unemployment rate falling, that's good news for them. So if the dollar's got any chance of rallying, maybe on tomorrow morning, it has a little bit of a day in the sun, who knows? But it is in all sorts and has broken a lot of support levels on its way down to where it currently resides. All right, so this week is a remarkably unremarkable week. Two central banks will go through their statements and give us their official bank rates. I don't know that anybody's expecting a change in either the CAD or the euro. So I don't think that's going to be anything to be concerned about, and hasn't been for a while, to be honest. But the statements, of course, will be where the action is, and everybody with bated breath will be looking at what goes on there. Who knows? Again, out of my area of expertise without question, and I won't go any further with that. Okay, we're still waiting for Alexis to come into the room, but I note that Julian has joined us, and of course it is getting, well, it's not that late in New Zealand, but let's go there right now if he's available. Jules, you there?
Yeah, hi Geoff, how are you? And belated happy birthday to you, mate. I think
Thank you, mate.
At our age, we don't tend to celebrate them as much as possibly we used to, but
no,
it's passing of something.
I'd like to trade a few in, mate, I've got to say.
Yes, you and me both. And hello, everybody who's listening in. And it's a fascinating, as always, a fascinating market.
What is fascinating you more than anything?
Well, yeah, look, I appreciate you going through some of the economic figures. I'm struggling at the moment to work out whether economic figures are a key driver to the market at the moment.
Relevance is questionable, isn't it?
It is, and look, you know, from time to time, of course they are, and if they were radical numbers, you know, miles away from where they're supposed to be, ex of unemployment, which is always just crazy anyway, then I think there would be a reason to act on the back of that. But I think we're sort of dominating by 2 or 3 political events. So, you know, yes, you know, post-Trump, pre-Biden, some sort of weird shadowland whereby Trump's still in charge, Biden's appointing advisors, and everybody doesn't want to do anything until they know what's going on. So this sort of tends to happen every time, especially when it's quite a contentious transition every 4 years. So no great shock there. But
I just see on the local news before I jumped upstairs that he was giving a victory speech, Trump.
I think there's an awful lot of fake news out there.
And, yeah.
Maybe he said something out of his 1.5 hours worth of speech that said something about the fact that we haven't given in, and Georgia's still really important to us, or something like that, which it is. And it's still very important for the Republican Party to make sure that they actually maintain control of one of the parts of the House, I think, so that the whole political machine, if you like, doesn't move over to the Democratic side. But who knows? I think that will be decided early January. So I think we're sort of, from a trading perspective, again, quite a lot of distance away from that being significant. So I think people are listening, but they're not really acting on it. I think for me, the key trends we've got going on at the moment are COVID's getting quite bad, but apparently so that's okay. But in the next 4 to 5 months, it's going to have an impact, and nobody quite knows what's going on over that. But who cares when Tesla's trading at 150 times its EBITDA profits? So, and I think something in the order of 50 times its turnover, something extraordinary. So nobody seems, you know, there's another sign. Are people worrying about the real economy? I think they may be, the back of their mind. But right now, the asset markets are pretty strong, right? I'm sure it's the same for you over in Tasmania. Housing markets are strong. The equity markets are strong. We're starting to see some strength in commodities. Everybody who's running a business right now seems to be absolutely flat tax. So, we're lucky in New Zealand because we sort of don't have COVID here, and fingers crossed it doesn't get to our shores again. We're doing our level best to keep it out. But I think this key factor here about the economy, is really important, because this is sort of what it's going to be like for everybody else once it rolls out. And we're seeing, apart from the obvious and very sad parts of the economy which are struggling, the rest of the economy is doing absolutely great. It's amazing what a low interest rate does to people's purchasing power when they have half the mortgage cost they had a year ago. So I think that's really important, and I think that's coming out in the economic figures vaguely. But again, nobody sort of cares. We're just buying stocks, and stocks look good and they're going up, with all the usual cautious words about when they're going to start to come down. I'm really nervous about the beginning of next year for Q1. I don't see it as being a big asset market continuation, certainly in stocks anyway. And I think there's going to be some problems down the road, but that's a long way away. Right now, let's get through Christmas and the Christmas rally. I don't think there's any reason why stocks, unless some event takes place, should really come off aggressively. So that sort of leaves you with, where does that put everything else? And in my mind, then you're looking at the inexorable rise of the Aussie and the Kiwi and the Euro and the Canadian dollar. I think probably the Euro would be the best one of the lot, Geoff, if you happen to have that one up. And really, you can see from this an extreme sense of trend trading going on. Look, this has had a great week. There's no denying it. It's broken out. It's trading well. There were some interesting signals on Monday, and the market sort of followed through for the next 2 or 3 days. Friday it paused, but overall on the week, that's a great week. So the question then is, this is coming at the end of a move from, I believe it was 105. So where are the key levels in the euro? The key levels in the euro is obviously now we're trading 122. It is not 122. So key levels are 123 and also the fairly obvious place of 125. So at some point we'll probably have a crack getting there. And then I think we're going to take pause. And the reason why I think that is because massively overbought by just about everybody. So I think, yeah, exactly. That's the exact zone. Thank you, Geoff. So somewhere up there, guys, is I think where this market's going to pause. Everybody's long of it. You can see that from the commitment as traders. Small speculators pretty much long to the gunnels of the euro, as they would be short the dollar index. So I maintain my view that I think we're playing for the last few dollars here, but that doesn't mean to say that right now it's going up. So play it from that side. That's what you're supposed to do. But I have a tremendous amount of caution about Q1 and about what's going to happen. When you look at dollar yen, which is my other favorite, I've been trying to get long of dollar yen for the last 10 days. I think I've had a couple of trades in the broadcast group which haven't quite worked out. Really frustrating. I think I sat there long in one of them for about 7 or 8 trading days. Crazy. It just would not go my way, and it kept trying to go up, or sort of went into profit the trade and then came back again. You'll find dollar yen there somewhere, Geoff. It's somewhere in there. So
yeah.
So the it doesn't matter, Geoff. It doesn't matter. I think everybody's pretty aware where the dollar yen chart is. You might say it's still a little bit range bound, but I think that the overall my overall track for dollar yen is higher. I wax and wane on this. I know it's cheap against a lot of the trade weighted, purchasing power parity, and it should be a little bit lower to get it to fair value for the yen. But I just don't think that's going to happen. I think we're going to see this thing this thing rally. And again, my rationale for that is 2 things. Number one is seasonal, and secondly is the commitment of traders. I'm not going to show you those charts, guys. You can go. Take it from me that there's some very interesting plays going on here in terms of where the commitment of traders and where the seasonals are heading. But is it now? Is it this week? Not too sure. I think we ought to, from a seasonal perspective, be going up. In dollar yen at the moment, but it's just sort of not happening. So let's just keep an eye on it. Probably something to do with Thursday's high. If we broke that, I'd be really interested and would play again. I think there's a big move coming in dollar yen. I think we're going to go back to that 111, 112 area at some point. So that would be quite an interesting part of it, I think. So, let's try and ride that if we see it, but it's really got to be a break above Thursday's high from a technical perspective to get me excited again. But don't forget that all you're really doing is being stuck in the range, right? And so that's the problem. Do you keep range trading this and end up buying highs of the range? It's going to break out this time. So if you're not sure about that, I think the key thing is a close above those two previous highs, Geoff, those two highs over the last couple of weeks. You can see that straight away. Those two, a close above that, I think on the daily chart would, for me, signal some kind of breakout. And again, I'd have some thoughts about putting trades on if you saw that start to take place. But don't forget, it's got to be a close. So it's got to be. We don't want another spike, so it's got to be a close above, and where we get some traction, that's probably worthwhile playing that.
It should be its nickname, shouldn't it? Spike.
Yeah. Well, talking about spikes, and great segue. Thank you, Geoff. That was perfect. Let's talk about the gold market. So the gold market this week, for those of you that listen into the broadcast group, you'll know, and I'm sure if Ainslie gets a chance to come in, that she was thinking the same way at the beginning of the week as well too. It got to our level, right? We always said between 1805 and about 1750 was the number, and we got exactly down there, and there's a ring low formation. Everybody can see that. That's a pretty square up formation. And then we had a straight rally back, I think about 60 odd points, 50 or 60 odd points straight up from there. Well, that's exactly what you'd expect. Now, the question is, as we all know, all that's very interesting, Julian, but what next? So gold normally tends to rally towards the beginning of the quarter of Q1, and then sort of tends to do quite well for the next three or four months. So sort of like January, vaguely through March, April time. A super strong trend? No, not really, but a strong enough trend. I think that's the key thing. And so when you're looking at gold and you're thinking about gold, you're going, well, actually, are we starting to preempt the next move up? We're way behind the move in platinum, which I'm sure you pretty much wouldn't have here, Geoff. But I highlighted that on my when I gave a talk a couple of weeks ago about how cheap platinum was against gold, and that platinum's continued to trade reasonably well. So the XPT, that's the one, thank you. And you can see just in your head, everybody, you've got that gold chart in front. You can see the platinum chart, right? You maybe want to stick that onto a daily as well too, Geoff, if you don't mind.
There you go.
Brilliant. Absolutely. Ooh. So that does not look like gold. Okay. Now I said 3 weeks ago, I said platinum is cheap compared to gold. Historically, it's very cheap. It's got a long way to run. This is platinum starting to reprice right now. I don't know. I'm not a commodities expert, so I can't dig into it and tell you why it's rallying and gold's going down. Why don't we just run with it's cheap at the moment against gold? And so that's what's taking place. So here's your strong market. Gold is weirdly your weaker market. I don't think we've often said that for a few months. So what you need to be looking on the precious is when you're looking at those gold, silver, and platinum relationships, sometimes they wax and wane, but platinum has been getting secularly cheap for years. And I mean like 2 or 3 years. So there's a lot of movement in this. It could go an awful lot higher. If the option traders, if the option boys at Sharesies and at the free platforms in the States who are trading options are going to get hold of this one, the liquidity is quite light, so they could push it quite a long way. Just be aware of that. Very interesting trends. That means that you can aggressively play it from a trend trading perspective. You're not really wanting to range trade platinum at the moment. There seem to be people who are getting hold of it right now and doing things with it. So as you can see, that has completely opposite relationship to gold. But if we go back to gold now, Geoff, sorry to flick around a bit.
Yeah, all right, mate. Hang on. There we go. That's funny.
Thank you.
Where did I get that one from? I'll just make it cleaner. There you go.
Perfect. Thank you. So the question next, everybody. Well, as you can see, it's rallied for what, 4 straight days, having fallen for 4 or 5 straight days. So it's pretty obvious that for the time being, 1750, 1780, 1800 sort of our number for major support. I don't think that takes too much of an expert. I'm sure every one of you can see that. So what we need to try and do here is get gold a little bit oversold on the shorter term time frame. So either 4 hourly charts or hopefully on the daily charts, just looking for a couple of days of corrective moves for it to walk back a little bit. Let's say some in the region of 1800 is the number to look at. Well, the reason why I'm saying that is because we got a high of 1850 here on this latest move, and we had a low of about 18, call it 1750. I keep the maths simple, nice and simple. It's about 50% of the way back is about 1800. If it gets into that zone between 1813 and 1788, then you've got to be really interested. And that could end up being quite a long-term hold. So again, you're looking for either some kind of reversal signal when it gets down there, or you're looking for something that says, actually, hang on a second, this is either going to consolidate and go back up, or it's at least going to hold this point until we get some kind of move in sentiment or something like that, which turns maybe the current bearishness in gold around a little bit. So this is, for me, a classic sign of professionals buying this market. So just bear in mind that I think there's an opportunity here. It's reached an excess. It's bounced hard. So we're now looking to stay. The trend has changed, and we're now looking to get back on the bull side again. If this all works out, and I'm looking 2 or 3 quarters out, if it all works out, we could easily go back to the highs again, just like Bitcoin has done. So bear that in mind. Very optimistic thinking from my point of view, and who knows? And quite frankly, at 1800, sort of who cares, right? We're not even thinking about that. What we're thinking about is the next few days and weeks. So when we're looking at these trends, when we're looking at this market and the way it's traded, this is giving us the exact signal that we'd be looking for to project, for the short run anyway, a market bottom. And the great news is that if you sort of buy around the 1800 mark and you're seriously wrong, you're probably only wrong for about 40 or 50 bucks. If you're seriously right, you're right for about 300. So you've got lots of opportunities to make money and just trade it as you see it. But the key thing is for us, it's been overbought for the last 5 days. Buying it now doesn't make a huge amount of sense. It was a downtrend that we came from. So we should get another crack at that low and it should fail. So you know the patterns we're looking for. We're looking for higher lows. Hopefully we'll get that and we'll be able to reinvest in the gold market and keep a more structural long position. The last thing, really, if there's anything more to say, Geoff, will be to say about oil. I'm not really I haven't really been looking at it too closely. I would just note that it trades very well, but I think it's overbought at the moment. So I think coming into Christmas and this time of year, seasonally, it's not always a great time for oil. Love to see a pullback. And then about the middle of January, we get the strongest seasonal pattern, probably of all the commodities in the world. And this is set up for it. So just think about it, folks. You've got real economic recovery on the back of the vaccine being, well, starting to be widely distributed. Okay, you've got hope for the fact that in the northern hemisphere, summertime, things are going to be back to normal. You've got an oil curve where the market's getting tighter and tighter. You've already got US fracking production falling, and I think they're down at least 1 or 2 million barrels already as a result of fracking. And for those of you who don't know much about tight oil, okay, an oil field where you're fracking only lasts about 5 years. It almost like comes off plateau the minute you start production. So it just declines almost from the get-go. So you have to invest more and more money either in that field or in other fields to keep that production from fracking going. This is something that people often don't understand. They say, oh, there's a huge boom going on. There's a boom going on with fracking because it's so capital intensive, right? You dig a hole in the ground and send the pipes out in 16 different directions. And then from then it starts to deteriorate. So you've already got to be looking for your next field, right? It's not like a traditional oil field, which lasts for 30 years. These things last for 5. So think something about the difference between a short-term reality TV show and something like, for those of you that don't know, something like Coronation Street, or for you, Geoff, maybe Neighbours, which goes on and on and on for years and years and years, and all the characters changes, but the program's still there. That's like the difference between a fracking field, tight oil, and also a more normal oil field. I hope I've drawn that analogy correctly, and I apologize to anybody who doesn't understand my reality TV reference, but you'll get the gist of it. So my basic thesis is oil is going up. I'm really bullish on oil. I've been bullish on oil now for about the last 3 months. I like it. I love it. I'm long energy stocks. This is the sector I want to be in. It's secularly cheap. I think people like Shell and BP are going to become amazing coffee houses and hopefully make lots of money alongside it. For instance, I think Shell even announced the other day they were opening something like an extraordinary number of new petrol stations in the face of all of the switch away from combustion engine cars. They're doing it because they want the real estate, and they want the real estate in those high streets so they can sell more coffee and probably charge electric cars, which take 10 minutes. And so therefore you're more liable to buy a high margin coffee while you do it. So I think that's their basic thesis about what they're looking at. So fascinating. Worth following, worth looking into, guys. But this is an under-owned area of asset class right now, and that's the reason why I like gold. I would not be surprised to see gold up at 70 or 80 bucks sometime next year. I would not be surprised to push it even higher if oil. So what did I say?
Gold.
Gold. Sorry. No, gold hopefully won't go to 80.
No, that'd be a thing, wouldn't it?
So a little late in Auckland today. So that my basic thesis for oil is higher. The question is, Q1 is normally a pretty strong seasonal pattern through till April. So hopefully that'll give us some overall direction for the market. Geoff, I think I've talked for ages. That's pretty much it for me. I hope that helps everybody with what I'm thinking about at the moment. And enjoy yourselves, guys, and good trading for the week.
Mate, thank you. Just one quick question from Helen. Brent crude oil futures 6-month backwardation hits highest since late February at 64 cents a barrel. What does that mean? Coronation Street puts me to sleep.
Okay, so two statements there. Thank you, Helen. Perhaps I can handle the first one. The second one, I'm afraid I can't really do much about. So a backwardation, so commodity markets have two things, like they have a backwardation and a contango, which are specialist words for the shape of the curve. That means, so if you're going to buy oil now, that's called the spot market. If you're going to buy it in 18 months time, that's going to be called the forward market. Okay, and there'll be a price. If you want to buy a barrel of oil in 18 months time, somebody will charge you a certain price for it. And it's not just linked to the time value of money, i.e. the interest cost, right? It's linked to a couple of other things, especially oil. Like, what's the availability in 18 months time? Is there going to be something else going on? So think about it that way, right? It's not just a time value of money. So although it's not a prediction of where price is going to be, what it does is reflect the difference between oil price today. So find me a barrel of oil right now, and an oil price in 18 months time. Hey, all the uncertainty out there, I wonder how much I have to pay for that. So when something is backwardated, the market is a bit strange. So it actually has higher prices today than it does in the future, which doesn't make any sense intuitively, right? Why am I paying more for it now than I am in a couple of months or 3 months or 18 months time? That doesn't make any sense. But what it means is that the market is a little short on supply today, right? So demand has been outstripping supply, and that's what drives those prices up higher than where those forward prices are. What's got to happen, of course, for you to get your barrel of oil today is somebody who's been storing it to get it out of storage and sent to you. So that costs money, and that's the reason why when there's a shortage, you have something called a backwardated curve. The normal place for commodity curves to sit is in contango. So what does contango mean? It's that price today is the lowest price on the curve. Everything after that price will be more expensive. Why? Because you've got to put some time value of money in there. You've got to add an uncertainty premium. You're not sure you're going to get the commodity. It could sit there in a container or on an oil ship on the seas. The ship might sink. All of those things, right, adds uncertainty, and that's why the price in the future is usually higher, and that's called a contangoed market. I hope that explains it, Helen, and that makes sense to you. It's really just about the short-term supply and demand. It's not about where the price is going to go.
Awesome, mate. Thank you so much. Appreciate everything you do as always. And we'll catch up with you hopefully before Christmas.
No problems at all, Geoff. It's always a pleasure to come online, and thank you for listening, everybody. And I'll speak to you soon.
Cheers, mate. Okay, let's head Singapore now, where it is, I assume, appreciably hotter than it is in Auckland and certainly than it is in Hobart. PH, how you doing, mate?
Hi, Geoff. I'm doing great. Yes, yeah, I've been a bit busy, mate, but I'm happy to be on the show today. I thought it was summer down there. Shouldn't it be warm?
So did I, mate. I'm not complaining. Like I said at the head of the show when you weren't in at that time, but we had a mate of mine from Lightning Ridge sent me a photo on Wednesday or Thursday, I think it was, and it was of the water cart driving up and down the street, actually watering the bitumen because of the bitumen melting.
Wow.
So 50-ish degrees.
Oh, okay. Well, the temperature in Singapore is not as hot as that at the moment. In fact, we've had quite a bit of rain lately, and it's been cool.
Just as uncomfortable.
Yes, yeah, it's been cool, but the humidity is always higher here, so so that always makes it feel a little bit hotter. Yeah, look, Geoff, I've got a couple of charts to go through here. And I'll probably show 3 different charts that are the ones that are most interesting to me, and probably take maybe about 10 minutes to go through these. So
perfect.
I wasn't able to use some what's it called, IFS markets, yeah, because looks like their live server is down this weekend, but I'm on Fusion. I'm on Fusion Markets, which is our other broker, and the chart that you should be seeing now is the Swiss yen, and I'm going to start with weekly charts and then move to daily charts, because I mainly trade on daily timeframes nowadays, and I'm just going to show you a couple of basic price action situations that I've been noticing, along with trend lines and horizontal levels, and I always have the 200-day moving average on my daily charts as well. So the first is the Swiss yen, right? And the Swiss yen is not, I wouldn't say it's the easiest pair to trade. It often ranges, but when it breaks out, it has massive moves in my experience. And so right now you can see the Swiss yen is between 2 bands. I think one of these horizontal levels is 114, and the other one is 118. Right, so it's just sitting just under 117 at the moment. But on the daily chart, here's where things get really interesting. Geoff, I think you'd probably like the pip perfectness of that trend line there, and we've had a solid break through that. All I'm waiting for now is a retrace, and I really also like the fact that this 114 horizontal level has been respected. They're not clean bounces off that level, but we didn't stay under that level for more than a day or two, which indicates that's where the support is, that's where the buying interest is, and any dips that you're going to see, I reckon, are going to be quite well supported between that 114 level and where we are now. I'm not exactly sure where the next higher low is going to be, but because we've seen a slightly higher high here in the last couple of days, that's what the next step for me is. And when I see that higher low, and let's say it comes down to maybe 115.70 or a bit lower, maybe about 115.40, that's when I'm going to start getting interested in a long position on the Swiss yen, with a wide stop, because this pair can have, it can have some spiky moves at times, but I do see that the short-term target will be back at 118, and then post 118, if we can manage to break out of that level, I don't know where we might head next, because we had a huge move down here back in 2015, and there's just nothing. I don't see anything until possibly about 122. So that's another 400 pips there that might be available on the Swiss yen in a longer term scenario. So that's the first chart of mine. Now, second chart here is probably it's a currency pair I've had a bit of a love-hate relationship with this year, the euro pound. Yes. Yeah, it was in favor for me, and then it was out of favor, but I'm starting to get back interested in it again. And actually, I currently got a long position on it, an early long position, just to put my toe in the water here, because on the weekly chart, look, I've got two horizontal levels here. One is at 90 and one is at 93. And we spent a bit of time below 90, but we didn't manage to go below, let's say, around about 88. I think it was around 88.60 or so. Yeah, pretty much. So we managed to stay there, and now we've broken above this 90 level again, and we've closed there on a weekly chart and on a daily chart. Zooming in here, I really like these spikes here. Okay, so one spike down to 88.60 and buying. The next week was, was an inside bar there, bearish inside bar. And then the following week, we've had a nice, decisive, or let's call it a reversal bar, right? It's the bar where the sellers the buyers just reject this level, this horizontal level, and they absolutely make their, they show their hand. And then we've seen a bit of follow through here. The follow through isn't super exciting, but I think that the bottom is in place here for the euro pound for now. So on the daily chart, again, what I'm seeing here, if I can just zoom out here, we're above the 200, which for me is is a bullish indicator, and we've broken this this trend line, and we're now in the process of really just coming back, bit of profit taking here Thursday, Friday, and I would see that any retests of this 90 level, especially if we go below 90, if we went back down to about 89.50, back down to the 200-day moving average, I would expect buyers to come in there and buy up the euro versus the pound. I don't have a fundamental argument to support this because I'm not a fundamentalist. So this is pure technicals, but I really like this little break of the trend line here. And we're just, currently we're just kind of, finding our way here in the low 90s. And next target for me would be, again, this 93 level. That is the euro pound.
If you don't mind, while you're still there.
Yeah, sure, mate.
Do you think that you would be prepared to trade this at full risk at the moment, given that we are weeks away from a Brexit, apparently?
Really? Are we? Okay. So
Helen's asking the question, so I thought I'd raise it.
Yeah, maybe I need to, follow the news more.
I think, as I understand, there has to be a Brexit by December 31st. The last I heard, and I'd have to defer to Ash on that, but that's the last I heard.
So my trading strategy, or my trading style, I should say, is get to my take profit one level as quickly as possible, so that I'm free trading, and no matter what happens, whatever news items come up after I get to my take profit one, that I don't really care. I don't really care where it goes, because it's at worst case it's going to be break even or a small profit for me, and at best case, it could go to the moon, and I'll be happy days. So I can't answer the Brexit questions, and the more I go into the news and start looking at different scenarios and trying to figure out how that might play out on the charts, the more it affects my trading. So nowadays I just stick more and more to the technicals, and I'm just the chart tells me what I need to do, and the majority of the time, that serves me well, in my trading decisions and my trading results. So can't answer the question. Sorry.
No, nothing wrong with that. That wasn't really the question. The question was, does the fact that we are in this Brexit turmoil and it is coming to a crescendo, perhaps, although I can't see how they go beyond this, would that affect your risk?
Okay. At this point in time, in this point in the cycle, I won't be trading at full risk. When I see another, let's say a higher low here, and maybe another higher low, then I'll consider dialing up the risk. My very first trade on this one was I think was about 0.25% risk. So my second trade here will be at 0.5% risk. And then if I'm in and I get another chance to scale in, perhaps, then it would be maybe 2 trades at 0.5%, or maybe 1 trade at 0.575%. But again, I'd have to look at the price action to know exactly what risk I'm going to put on which trades. Yeah, so sorry, that's not a simple answer to the question.
I got it. All good.
Okay, cool.
I traded that long as well.
Yeah. Oh, good. See, Geoff, why it's uncanny, mate. Great minds think alike. We often see the same things in these charts. I like that. I like that. Okay, so that's the euro pound, and then the third chart I have here is the Aussie CAD, and I'm starting here on the weekly chart, horizontal level running through here at 96. And look, most of my horizontal levels are at round numbers, because I believe that they're psychological levels where, people pay attention to. And we've had a really strong rejection of that 96 level. We've had a bearish engulfing on the weekly chart. And I'll zoom in here just so you can see that a little bit better. It's also a lower high. Yep. And on the daily chart, Friday was a big day for the Aussie CAD, right? Or the sellers. Yep, they pushed it down, and there was a little trend line there which got broken. Yeah, not sure if we'll see that trend line get retested. I'd love to see some inside price action on Monday, but I just think this is tired. CAD's strong, oil's strong. Julian was talking about oil before. Yeah, maybe oil is overbought, but I think the Canadian dollar will still continue to outperform maybe the other commodity currencies like the Aussie and the Kiwi. So I'm anticipating lower prices here on the Aussie CAD, more so than most of the other Aussie pairs right now. So that's kind of, I don't know, I wouldn't necessarily consider it a reversal trade. I'd more consider it a potential aversion trade, because we do already have a lower high put in here. And I don't exactly know how to get into it, but I do need to see a little bit of a retracement there. And then maybe an entry at some midpoint there, and a stop loss, above the recent highs at 96.20. First target would be the 200-day moving average, and then. Yeah, look, there could be a few pit stops along the way there. There's a horizontal level there as well at around about 90. Oops, that's not the right one. There's a horizontal level there at around about 94, I think. Just a second. Let me see if this works out. If I just give it a round number, pretty much does. Yeah, we got resistance, not support, resistance here. So that horizontal level pretty much pans out here. And by the time it gets down there, the 200-day moving average could have come up. So we've got, there's 100 or so pips to be made there, I think, on the Aussie CAD. And look, if this thing turns out to be a longer term kind of a topping pattern for the Aussie CAD, then we might see movements all the way down to, I don't know, maybe here, which is about 92.40, or down here even further, which has some good horizontal support at around about 91.40 as well. So those are the 3 charts that I'm looking at right now, the most interesting charts for me. Happy to entertain any questions or any comments from the rest of the team on those.
That's another tick from me, that one. In fact, I think if there's no gap in the market in the morning, I'll probably look to trade that bang straight away. That's a dominant break.
Yeah. Thought that might interest you too, Geoff.
Mm-hmm. Yeah, it's on my radar. Don't worry. Yeah. And I agree with you. I think the Aussie could do with the pullback, and the CAD on the back of oil probably is pretty strong. Yeah.
Well, it doesn't. It only needs one of them, right? One of the two, right, to have price action that's have movement in the direction that supports this trade, and there'll be pips to be made.
I'm a little bit hesitant to trade the Aussie for any period of time down, however, because I think it's got very good claims.
Yeah, look, on that topic, if I can just take up another minute or two, I think. And this is another thing I've been waiting for the longest time for. which is the Aussie Kiwi, to finally make a bottom here. So see, there's a nice low test bar there on the Aussie Kiwi weekly chart, and on the daily chart, it's just managed to get back up to, this is a monthly pivot just there as well. Bit too early maybe to jump in and get long on it. I'd be waiting for a higher low there, but the Aussie is not the run to the litter right now. You know, it's holding its own against some of these other currencies, but against the CAD, I think it's going to struggle.
Another tick. I'll be doing some analysis on Aussie Kiwi in about 10 minutes or so, mate.
Oh, cool.
Yeah.
Anyway, I didn't want to steal your thunder there.
That's all good, mate. There is a question from Fad, and I know we've had a quick look at gold with Julian. Have you got an opinion on gold? And I know, of course, Ainslie will be in shortly to talk about it as well.
Yeah, look, I remember Julian talking about gold a couple of months ago, and he was talking about the fact that, hey, you know what, we need to see some retracement in there, and we've seen that now, right? And I don't know. Oh, that's not the right chart. That's the gold against the Aussie. Hang on a sec. We've seen that retracement. We've seen the thing come back to 1800. We've seen it actually go down to almost 1750. And on the longer term scale, I think the comment that Julian made today that resonated the most with me is, if you're wrong here, if you're a bull and you buy it, somewhere inside last week's green bar there, you're not going to be wrong by too much. But if you're right as a bull, the upside is pretty attractive on this. So I very much would agree with Julian's comments on that. And I don't trade gold the same way I trade currencies, but I'm certainly going to be accumulating some gold. Maybe the GLD, or maybe I'll be going through some gold miner charts and getting accumulating some shares on some gold miners in the next couple of days. So I hope that answers the question. I don't see this as a short, guys. Not with a decisive bullish weekly candle. I wouldn't be selling this. But I've got a different time frame. I'm not looking to trade this on a daily time frame kind of thing. Sorry, Paul. Hey, how are you going, Paul?
Mate, I'm good. How are you going?
I'm going great. I'm just looking forward to Christmas and chilling out.
Yeah, mate. Got to say, looking forward to Christmas as well. Nice. Thanks, Julian, for popping in and having a bit of chat. Sorry, I'm late, guys. My wife's been away for 10 days. We just popped up to meet her on the way back to Wellington, so for the kids at the holiday home. So just been sort of catching up and those kind of things. PH is one of these fascinating charts for mine, because I think Fad's right that technically this has got lower highs and lower lows, and that makes it a downtrend on a weekly chart. And
yes,
on the chart as well,
that's
right?
a daily, yeah.
So, but at the same time, I think that if you put it back to the weekly, you wouldn't be selling it at this point. So it's still not a sell. It's just technically it's short. And I personally I bought it and I'll be buying it again. And I think one of the things that's fantastic about trading charts is that you can look at the last highs and lows, and you can say that this is lower highs and lower lows and it's a downtrend.
True.
Or you can look for the last few months and you can say this is a retracement and an uptrend, and it's a buy level. And you can make either case. You can say that gold's had a big leg up, it's retraced. You better put a fib on that from somewhere to somewhere, and make it a 38.2 fib retracement to where we are, and say that it's a there we go, from there to there. That'll
50.
50.
Yeah.
Perfectly right. You can always put a fib on something and find something, right?
Yeah.
But it's so it really depends on how you look at the chart. And what's that one halfway up, PH? Just a bit further back.
This one?
Yeah.
Yeah.
Yeah, there we
That's
go.
the 38.2. Yeah.
Yeah, there you go. There's always one, right? You can always find one. So you can say this is a 38.2 fib and or 50% fib and uptrend, or you can say this is lower highs and lower lows, and it's a downtrend. That's why I think you've got to use your judgment. And I always say the longer the stronger. So for mine, the prevailing trend here for me is up, and this has been a retracement leg, and I'm looking to buy. And I agree with what Julian said again. You know, what I really like about Julian is languaging. You know, this is about understanding when you're wrong. And if you get long here and we take out the low of last week's bar, you're wrong, and you've got to get out. You know, and new targets are down there for the shorts. You know, maybe we'll have a run up and we'll run back down to that. You know, personally, I think we're too close now to the Christmas rally, and I don't think we'll put in a lower low from here. But you know, again, this is trading, right? You have your opinion, you make your decision, you control your risk, and you hope that when you win, you can, you know, if you get in this the right way, you can make a lot of money on it. Actually, sorry, I know I digress. PH, we've got Ainslie who's doing another event today. We've got another event running at the moment. We've got a bunch of guys over there. I know Lloyd's over there. I know that Ainslie's over there. I know Ash is over there. And Ainslie's just popped over here. Can she do gold? And then can we come back to you, PH?
Yeah, look, I gold is not normally something I talk about on this show. So I was just it was to sort of respond to Fad's question. So absolutely, I've already analysed my currency pairs. So
we're actually about to find out if Bitcoin is going to dump or go to the moon.
Well, we know what we're going to hear on that. We're going to hear it's going to go to the moon. But let's do Ainslie first, so she can get back into the other event we're doing.
Sure,
for sure.
After. Is that okay, Geoff?
No problem.
Ainslie, you ready?
I am. I can't share my video, but that's okay.
You can't share your screen, is that what you're saying?
No, I can't share my video, or let's see if I can share my screen. No, I can't do that either. I am disabled. I'm a disabled participant, apparently, according to the error message. Try that again. Okay.
Unless your co-host might have done that, yeah.
New options and share. Hello.
There we go.
What a busy week we've had with gold. Hello.
It's been okay, hasn't it?
I know, it's been quite good. Now we've been chopped, and you can see that we've been chopped around a bit, and that's okay. But you can see that we've got, and anybody in my broadcast group who's been adding to this lovely little bounce off the lows here, we're on our way. I know I talk about gold having a lovely move around the middle of December, but she's moved early, and sorry, that's just like in the fast lane, isn't it, really? That's the way it goes sometimes. So we've had a nice move. We've had some bits and pieces backwards and forwards, and I've been quite diligent with, hey, we bounced off the 100 in the 4 hourly and it didn't close, and what's it on the daily? The pivot's up. The pivot shouldn't be up there. Pivot should be down there on the monthly. I'm not sure quite what's going on there. Let me just check that. But we bounced off the 20 EMA on the daily, and it didn't like it. It came straight back down, as you can see. And as just chopped and changed. We had NFPs. It just went sideways. Now, that's good. That's really good. We had bearish involvement, and we all love that setup, don't we? Because we all know that that is 1, rejection of a lower level, 2, close above the high. We all know that's a low test bar and a ringed low, and we're off. Now, what this is going to do in here, because we've got some fairly strong support levels happening left and right, let's see how we go. But at the moment, anybody on my broadcast group knows that we're in, and we're just going to see how it pans out for this next little bit, because we're chopping in backwards and forwards. And yeah, I think this is not a short setup to me at all. Might be optimism, it might be. Cancel that. But let's see how we go from here on in, because I really quite like this setup, and it could be a retracement on the monthly, and we're coming back up and going to keep going. I still haven't seen anybody say, you know, year end, we're looking at 1,700, 1,600, any of those figures. I'm still reading a lot of analysts, and we're looking at that as a response to backing up COP reports and where people believe this is already going and where the orders already are in the market regarding gold and where this is going to go towards the end of the year. This is what I'm looking for. This is what I'm hoping. So yeah, we'll see how we go from here, but I'm still long, and at the moment it doesn't really matter if anything comes back and clips me out, because it's I'm quite profitable from some of my trades down here, and my stops are up here, and we'll just move stops up on Monday and protect positions, and hopefully we'll keep going and we'll keep adding to it, which is what the name of the game is. So I'm quite excited there, Paul.
Sorry, Ainsley, I'm Geoff's got the show. I've just sort of popped in to bring you in so we can get you back into the other show as well. I'm not surprised you're excited, and nice time, a great trade out on was it Tuesday night?
Yeah. So we started on Tuesday and off we went. Sorry, I came in late. I have no idea what Julian and PH were talking about on gold, but yeah.
Look,
I'm happy.
Look, and Fad's been asking some questions, but it was nice to get some questions, guys. The more questions you can ask, the better off we are as a show. Ainsley, thank you for that. We'll let you go so you can get back over the other show. I know you've got some
I'll
stuff
see you later, guys. Bye.
I think we might have Lloyd is with us at the moment as well. Lloyd, are you in?
Hi, everyone. Yep, I'm in. So let me grab your screens.
Let's do Lloyd, and then we can go to Shukri so that Lloyd can go back as well, eh?
Just give me a minute. Where's my screen? That's odd. There it is. All right. So, good evening, everyone. Okay. All right. So the first off my list is actually the New Zealand currency. It has actually broken my resistance level. Yeah. But I'm actually at this moment not that optimistic about it yet. So if you compare the momentum for this part, it's actually quite weak during the break. So whenever the momentum of the break is weak, at the back of my head, I will suspect that it's a false break. Yeah. So the upcoming week, the next two price actions at the 70 level, I'll pay very close attention. I will see whether this is a false break or indeed this is the actual break, and I'll have a retest at 70 so that I can go for a long. Yeah. So keep a lookout for Kiwi. Now Euro is the one that you can see that pretty optimistic about it. Compared to the previous momentum, you can see that price has the momentum behind it during the break is quite strong. Yeah. So I'm just waiting for a retracement, and then I'll put in another long position. Now Swiss is the one that's actually caught me by surprise, but on hindsight, I don't think I should be that surprised after all, because Swiss is the Swiss currency is actually pegged to gold. So if we do expect gold to rally, then it makes sense that the Swiss currency will also rally. Yeah. So by that reasoning, I will hope for price to actually give me some sort of retracement so that I can actually go for a long. Now Aussie is another one that is giving me some worry. So you can see that on the previous peak, and compared to the current ones, that means the momentum of this pair is actually not very strong. Yeah, so that will give me some sort of concerns. For any positions, any trade setups that involve Aussie long, then I'll probably be reducing my risk and see whether price actually give me an actual bounce off 74. Then I'll determine whether to go long or short at that point of time. Yeah. British pound, that's what I expect. Price will go to 135, give me a rejection. So I'll be looking for short position in the upcoming week for pound. So this is kind of momentum that I wish to see when price breaks. You can see that the momentum is pretty strong. Yeah, with the Canadian currency. So what I'm looking for is for price to give me some sort of retracement. I don't think they will have a deep enough retracement up to 77. Yeah, so a slight retracement, and then I'll add in to any long position that I have with CAT. Now the yen currency, at this stage, I do suspect that a reversal might be going on. So I have a pick. Then if you look at it, yeah. So the momentum on my Osma is actually waning. Yeah, it's dying off. So what I'm looking for a play that price will do this, so that I can go for a short position somewhere off the trend line or even the horizontal level. Last one is DXY. The break of DXY for the momentum is also pretty strong. So I'm simply just waiting a retracement all the way to 91. Not say all the way to 91, but this will be a slight retracement, and then I will add in any short positions. So that's what I have for the upcoming week ahead. That will be the end of my analysis.
Cheers, Lloyd. Thank you very much for that, and thanks for popping in and doing it for us, mate. I know you're busy today, much appreciated. Geoff, I'm happy to hang in. Geoff, I'll be around for a while. Do you want me to do it, or are you gonna finish off from here?
Sorry, mate. I did send a message about 5 minutes ago, but it hasn't gone through. I can see the little blue circle of death. No, I'm happy to go. All good.
Sorry, mate. Did you send it through on Skype? Oh, yeah, it is.
Did you actually get that message?
The one that says "Gone away 2 minutes and back."
Yeah, that's the one.
Yeah. Sorry,
It was
mate.
bad timing, was it?
Yeah, sorry, mate.
All good, no dramas.
Let me hand back to you, mate. I've got Julian on text as well. So let me have a bit of a chat with him. I'll be around. I've done the same thing I did last. I came here for Noe, and I came up and brought my computer, my mouse, and not my spare keyboard. And my mouse doesn't work without my new keyboard, so I'm a bit clumsy on the old thing today. Let me hand back to you, mate. And I'll go and have a look at other things. Okay.
All good. Happy days. Righto. The big question of the week, the month, is it even the year? No, it wouldn't be. It would be whether Donald Trump's going to actually leave the White House or not. But one of the big questions is whether these crypto things, what are they called? Cryptocurrencies.
Yes. Big.
We're halfway to the moon, or are we quarter of the way to the moon? Where are we, mate?
We're pausing, and I show you why this is important. Because we just talked about it next week. So in this week, we're going to talk about other coins than Bitcoin. So let me show you the interaction.
Please
This is very important, okay? So you need to know both sides of the equation. So I know we've been beating up this chart for so long, but look at this. The important thing, this is not crucial. 19,073, I'll show you a chart why that's not crucial. This is crucial. The dominance is only 62.6. If it goes to 57, we are in heaven, or at least we're close to heaven, okay? Seventh heaven, is it the seventh heaven? And I'll show you why. If it goes to 65, no, that means Bitcoin is going up too fast. Because look, Bitcoin is struggling here, Geoff. Look, it's going nowhere. This is what we like. Ethereum is trying to go up. Now, when Bitcoin chops like this, I think in last week's wallets class, we talked about two coins, right? Because I'm going to be talking about the smaller coins. Also, look what happened. They have gone up by a lot. This is Compound. This one got hacked. I told you guys that I got hacked. No, not I got hacked. Compound got hacked. Look what happened since the date of the class, which was like 28 November. It's gone up like 50%. The other one, which we talked about, was REN BTC, Australian company, your country, Geoff. One of the most innovative companies that brings Bitcoin onto Ethereum. It goes up like 20%. Now it's down again, but this is no problem. It's just simple consolidation. So you can see how these coins go up very, very fast. And let me reveal to you now that don't believe in rumors, okay? There's a lot of rumors, there's a lot of FUD going on that's trying to scare you guys. Okay, like Bitcoin is going to be banned and all that. That's not true. Hacks and all that. Let me tell you that I'm up 80% already on my trading account for cryptocurrencies, and half of that amount was made by trading coins that got hacked. I love hacks because Geoff there mentioned something. What do you say? Emotive bar. You know, it's like news, Geoff. It's like NFP or something. It goes one way and then suddenly, hey, wait a minute. Maybe that wasn't right. Maybe that's not the way to go, right? And after it got hacked, look what happened. Didn't we discuss this last Saturday? Look what happened this week. Same thing again and again and again. And you're going to hear a lot of rumors. And one of the famous rumors is Bitcoin going to be banned? No, it's not. Look, this is the comptroller of the currency in the USA. And he said that Bitcoin's not going to be banned. Let's hear what he says about cryptocurrency, because there's a new administration coming. Biden.
Because we're very focused on getting this right. We're very focused on not killing this. And it's equally important that we develop the networks behind Bitcoin and other cryptos as it is that we prevent money laundering and terrorism financing. So believe me, there's a balance here and it's going to work for everybody.
So that's a neither a yes or no answer to that. Should we be expecting some new regulations by the end of the Trump term?
I think you're going to see a lot of good news for crypto by the end of the Trump term. Some of it's going to have to do with banks connecting to blockchain. Some of it's going to be more clarity around.
Okay, so it is becoming institutional, guys, because last week, just after this interview, this came out. Oh dear, look at this. The S&P is coming out with a cryptocurrency index. 550 coins. We don't know. But what do we know? When they're announced, there's probably going to be a pump on 550 top.
550 of the top. Is that even possible? Is that a thing?
Yes,
or is
there's
that
about
that's an
3,000.
oxymoron?
There's about
How can
3,000.
There's going to be 550 top.
Yeah. So I think, Geoff, there's going to be like sectors, you know, like now there's energy. There is a similar quote unquote energy sector in cryptocurrency. So they're going to have that. And
Okay.
you know what makes this exciting? That one day, yeah, you know, you guys saw what happened to Tesla, right? Although everybody knew it, that when it was, when it went to the index, it popped like what, 10%. This will happen the same way too. Another news next week, this riled many people, Facebook. Oh no, Facebook is coming out with its digital currency Libra next year. So next time I can, you know, when I go through Facebook Live, maybe I can ask for donations. Pay me in Libra, guys, pay me in Libra. So this is backed by the US dollar, okay? And this has got some people riled up. So what's happening now is that, you know, stable coins, they're saying that, I think this is the Biden administration get another headache in the US because they want the companies that issue the stable coins like Facebook to have a banking license. And that's the only thing that's really impacting crypto. Bitcoin is clear, but what about the companies that are issuing stable coins? And you know, the big guys, of course, there are Coinbase. So this guy, guys, was also from Coinbase. I think I told you of the shenanigans last week, right? Which was the company that was kind of responsible for triggering that hack here, which caused this to go down and then go up again. It was Coinbase. So, you know, I still think this is a big, how do you say it? A big conspiracy among the rich, right? They want to push it down so that the guys that don't know anything get out and run, and then they bring it back up again. Okay, Geoff, any questions there? Who has questions on cryptocurrencies? But the idea is don't be scared. So I think I'll have to go about FUD, fear, uncertainty, doubt. What we've heard before, which you shouldn't hear anymore. If you want to be afraid of the new stuff, okay? The old stuff are just meant to take money from not the poor to the rich, although that often happens, from the uninitiated to the more knowledgeable people. That's all I have for this week.
So, mate, are you waiting for a dump?
I'm waiting. Yeah, I'm just waiting for it to come back to this trend line. I think it's not going to go anywhere, but towards Christmas and before the end of New Year, I think we're going to blast past 20, go up off 22, maybe even correct back down to 20, and then it's off, sayonara. No more after that. It's like bye-bye. Then it goes to a new level.
What date did it make the highs 2 years ago, Shukri?
18th of December.
18th of December was the one.
1 week before Christmas because nobody's there. So we are approaching that point of no return.
Yeah, I think we're going to see it volatile between mid-December and mid-January. I think it's going to be because it will thin out numbers, and boy, then you will get the pumpers back in that market doing all kinds of crap if they can, because they have the volunteer to do it, right?
Yes, everyone's and now the big guys are in. And you saw that dump just now, that big red bar, Geoff. Okay, came out in the news today. As the big guys were dumping Bitcoin, Grayscale was buying it. Grayscale is the closest to an ETF Bitcoin. So it's like the rich dump and the rich buy. The new ones, the new rich that comes into the market. So
no, you know, Shukri, there's nothing new. That's just the markets, right? The rich buy, the rich sell, and we tag along, right? Go for right, so we can make right. What did you say? Your crypto trading account is up how much?
80%.
And over what period of time is that?
Huh? And that's about 5 months.
5 months.
Yeah.
Did we give him some money, Geoff?
Well, I'm waiting on the invoice. I keep asking, but he never sends it.
Well,
I learned something from Geoff, you know, emotive bars. Yes, you have to have guts to go in, but emotive bars, when there's a hack, go in. To me, it's free money now.
You know, I was bizarrely enough, I popped in to watch a cricket game today. I just for the first time in years. So I wandered around the boundary, and one of the guys I knew came and spoke to me, and he told me that he bought some chairs in New Zealand. When everyone, he said it's so easy just buy, and everyone else is selling. I'm up 40%, and the motive bars of that, right? You just, you know, when everyone moves, you just got to say, well, is there really a reason for this, or is this just hype? And you know, see what happens, right? And I think, you know, it's going to come right. You know, so well done, mate. 80%, not bad at all, and 80% in 5 months, and you know, it's one of those things with crypto, mate. Everyone says the same stuff. Oh, well, we'll see if you can make it 8 months. We'll see if you can make it 12 months. We'll see if you can make it 17 years. Well, when he's made it 17 years, guys, you've missed out. So do get into some of this stuff, because, you know, I think everybody should have a little bit of crypto. You know,
a bit like ice cream, isn't it?
Yeah. How do you know that?
Because I just had one not long ago.
I'm up at Awakuni in the middle of the North Island, middle of nowhere, and it's the only place I can get keto ice cream. So I've been tucking away keto ice cream. Keto
is
ice
there such
cream,
a thing?
There is such a thing in New Zealand, mate.
Ooh,
hey?
okay.
Yeah.
Send me the recipe.
The recipe is go to New World and buy it.
Yeah, that's a bit of a journey.
Yeah, look, it'll get, mate. You're in Australia, you're in Tasmania. It'll get there in the next 2 to 3 years. You'll get some.
30.
Mate, so where do we go from here? Are we going to you, Geoff?
We're going to me, and I'm struggling to find 4 charts, so I'm not going to share 4 charts with you. I'll share 3 instead.
Cheers,
and
mate.
The first of them, you're probably sick of seeing. It's Euro CAD. Looking at the weekly chart here, and I think I've been looking at the weekly chart and seeing exactly the same thing for many, many, many moons. And it really all revolves around this double top that sits here. And every time we look like we're going to smash through here, and we pull back, and there's a nice little reversal bar there.
Geoff, don't think you're sharing a chart yet?
Oh, I should be. I'll try again.
That looks better. It's coming up now.
Oh, okay, cheers, mate. Thank you for that. Again, every time I look at this.
Sorry, mate. I just had the hard word from the other organisation, the other event we're running today, that I'm expected over there. So I'm going to pop over there and leave this with you to the end. And
happy days,
thanks very much for covering for me. Thanks everyone that's turned up today. We appreciate you guys being here, and thanks to the team for doing it again. I will be back for a full show next week. I'm sorry I've missed a bit of this one. Cheers, guys. See you.
Cheers, Paul. Mate.
So this is based pretty much on this double top that you see here, but it's got bigger form than that. This level here is just super strong, 159.5-ish, let's call it. But every time we get there, we just knock it on the head and come back off it. This time is a little bit different in that we've gone into a range since the first pullback and really gone nowhere since. But we keep seeing these lower lows, rejection bar, lower low, rejection bar, lower low, rejection bar. What the bloody hell? Why doesn't it just piss off and get out of here? That's my question. And yes, every time I see one of these, I think, now's the time, and we will try once again to get into this trade, if we can find a trade. That is the biggest issue, of course, is Friday's bar, which was massive, and now we need to have a pullback of some kind to even think about getting in. Not least because we've got the monthly pivot dead ahead. That's the daily chart I'm looking at right now. So where, when, how? Yeah, good question. I'd love to see what happens tomorrow morning. If this market does gap down, then we've got a bit of an issue. But if it were to gap up, which I can't really see, but you know, that stranger things have happened, we might look at I don't know, a level up here that's pertinent, maybe that level there as a pullback target, 1,555 up in this vicinity. That may be our only hope here now, because this could just tank, and that's what I don't want to happen, because I can't get in right now because of the monthly pivot. One thing, if I look at this chart, this is the 4-hour chart, and I won't go any lower than that. It's showing me a very, very clear false break scenario. But again, if I were to pull back here now and test that level, it gives me an entry here. or probably even here. I can't do that. I can't trade into an untested monthly pivot. Just doesn't work. So I'm not real sure how I'm going to trade this, but I'm dead set keen to get in. We have a key reversal bar, and this is a massive key reversal bar on top of a double top, on top of a triple top. You call it what you want, but this has to go, in my humble opinion. And I've been saying it for months. This has to go, but I just can't find a way in right now. But I'm searching, and every opportunity that I find during the week, starting tomorrow, I'll definitely be looking for an entry short. It may be that I have to trade it as a break and retest of that trade line, but I've got to get through the monthly pivot first. So break here, retest here, and as though I would hate to do it, it's a terrible, terrible entry because of all these bull bearish bars, and you're right at this support level as well. It would have to be a very, very quick TP1 because of all of those things that I've just mentioned. Dreadful place to get into the market after those 3 bars, but I'm keen to get in somewhere. Get back here, and we've got a different ball game. That's where I'd like to enter, but whether we get that opportunity or not, of course, is another story. So that's the first one. I did say I'd have a look at Aussie Kiwi. Now, Aussie Kiwi, speaking of key reversal bars, this is another massive key reversal bar. And those of you who know how I trade will know that I won't trade that bar because it's got a bull body, and I don't like bull bodies. I want a bearish body, or I want a black body before I would trade that. So how am I going to get into it, and why am I going to get into it? Well, that market structure there is perfectly clear to me. And every time we come to the bottom, we either false break it or we bounce off it. This looks very much to me like another opportunity to bounce off it. It's also a horizontal level that we've closed above, as you can see there, that 105 mark. Again, the only question here for me is how. How do I get into this? And again, to jump in here, exactly the same thing in reverse, isn't it? We've got the monthly pivot dead ahead, though I note we did try and get above it. Failed, of course. So we need a pullback here again. That's the daily chart I'm looking at. 4-hour chart is showing me a little bit of what I call a double cross on the 4-hour chart, as I said, I think I said. And that always does interest me, always. Whether I've got I won't say kahunas, because I don't think it does take a whole lot of guts to get into this long, but at this level, exactly the same thing. You know, is that enough pullback? Is it really? You know, this is red hot on a 4-hour chart for 3 days in a row. We've just gone bang, bang, bang. Is this enough pullback? That's the question I have to ask myself. And am I at the right part of the cycle, or cyclicity? If there is cyclicity here, then it's not in my favor, I don't believe. It's got to come back to here and give me a higher low. So I don't see that, but if in the morning this doesn't gap, then I think I will be placing a small risk entry above that candle. And stop loss, good question. I'm probably wrong if it goes below that bar. So I'll probably just trade that bar, but this will be dependent entirely on whether we get a gap in the market or not. If it gaps up here, for instance, forget it. I'd then have to see a massive pullback or a trend line break or something like that. The absolute preference, of course, is to wait till this gets back down to here and gives me the higher low that I'm looking for. But I've got a funny feeling that it's not going to give us that opportunity. So I'll go in very, very light here. And if I'm wrong, then we can look to pick it up again down here, and that won't be a huge issue. But I think this is eminently tradable based on the bigger picture. And the bigger picture for me is that chart there. You can even go to the monthly if you like and see how strong this level beneath us that we've bounced off is. Around about, well, it's a little bit above parity. It's nearly 102 actually, but you can see that price is just never has been, never. Long time since it has been even interested in getting below that. So we have got a higher low based on this chart. Well, forming. It's not there yet. I'm super keen to get in there somewhere, and if I have to do that on that 4-hour chart, then I'm prepared to risk that amount just to get into the trade. And if it fails, as I said, I can get in down here. If that fails, I'll get in down here, and we'll just continue to haunt this or track it until we get a trade. Now, here's a controversial one. Pound Kiwi. Controversial. I'm already in this, and we've taken profit. So I'm free trading it. So I don't have an issue. But I think this was high risk. And it's high risk because of fundamentals more than anything else. But if you have a look at the market structure once again, it's also telling me that there's a strong close below that market structure. Retest is what I'm expecting, and probably that was what I was looking to trade in the first place. But this gets really exciting if it gets back above that line there. So that level, well, depends on when, but if it were to happen this week, you know, you'd be looking for it to close above, let's say 195.50 to 196, something like that. If I were to see that and then a pullback to that line, I would most definitely be looking to scale it back into this. There's probably good trend or / trade lines to give us guide here. And the first of them is actually this one. Might come back from there. Yeah, that'll do. So you can see that little range that we broke out of a couple of weeks ago, or a week ago, a bit over a week ago. Back up to the monthly pivot and straight back off it. So this gets interesting if we get above there, get a close above the monthly pivot and that trade line, pull back to the confluence of both. And then I think that's an add-in, you know, just buy it again. Why would I be looking to buy the pound at the moment, especially versus a commodity currency that's been on fire like the Kiwi? Well, I think it's pretty much a calculated risk, shall I put it that way, based on a deal in Brexit going through, which it has to do, in my humble opinion. And as I said, I think that's has to happen before December 31. Do you really think they want to go through Christmas without having the deal? I don't think so. So I think that's on the cards. I think the Kiwi is probably a bit hot and is coming off a bit. There's no question there for mine. So I think this is valid. And if we can get into this, and it actually does sustain itself for some time, I'm doubtful of this now, I've got to say. But this confluence area I've been pointing to for forever and a day, probably since I can't remember when, but months and months ago. Down here somewhere we started talking about it, I think. And we tried to trade it up to that level on 2 occasions. One was a winner, one was a break even, I think, from memory, maybe even a small loss, I'm not sure. But yeah, if we get the opportunity to trade that again, I now have grave doubts that we'll get to there because of the dreadful scenario. The UK is a bit of a basket case, to be honest, from my reckoning, and to see the pound actually strengthen, especially against a commodity currency, which we're all expecting commodities to rally. We're all expecting the Aussie dollar, the Kiwi dollar, the Canadian dollar to be strong, certainly against the US dollar. It's very, very difficult from a fundamental point of view to be actually trading this long. But the technical chart to me is a different story, and PH is the same. You know, if the technicals are saying one thing, you've really got to follow that, because that's what we do. We're technicians. And if I definitely get above this line here, then this comes back into play for me. Not sure how it does it, frankly, from a fundamental point of view, but that's where I'm at. So it's Euro CAD short, Aussie Kiwi long, pound Kiwi long, and as I said, I'm pretty much struggling thereafter to find anything worthy of my attention. I'll just check the chat box before we bid you adieu, unless there are any questions from anyone else in the room. Chat looks like it's empty. But don't have.
Geoff, I just had a question for Shukri before on the something that came out. I think it was about 4 or 5 days ago from one of the ex-Goldman Sachs guys, Gary Cohen.
Mm-hmm.
But I feel like the comments that he made about Bitcoin he was referring to lack of, kind of lack of transparency, or lack of auditability of Bitcoin. I think most of his comments don't have any substance, and might even be a ploy to try to bring the prices down, and he and his mates can get in and buy some at lower levels.
Yeah. Yes, PB, because look, Bitcoin is very, very transparent. Because Geoff, you asked me one question, right? I was giving you all the data and you were asking me, how sure of you of this? But because we can look into all the wallets on the blockchain, I said, I'm 101% sure of this.
It's the 1% that worries me, Shukri.
Over 100. But yes, the thing now is whenever it goes down, all the big funds come in again. So I'm not surprised that people are trying for it to go down, because it has been shown, and this is historically time and time again, if it goes above 20K, when it comes to retest, then it's gone again. So this might be the last chance to get it below 20K. And yes, people will try to bring it down.
Yeah.
So where are the stops currently, Shukri?
Now they're looking there. What was the last one that I saw? The highest one is at 17,300, all the way down to 14,911.
Cool. I'm not putting a stop down there. Where? Yeah, I don't want to. That's not going to happen. Where's the most obvious stop loss zone, which is
what's happening now? If we look at the pumps and dump, which is all the games played by these guys, they will dump it for like only 10%. So 2,000. I've seen that before. A long bar 2,000, and then it magically goes back up again.
Right. So we start buying at 10%. You reckon?
Yes. You can start buying at 10%, and your stop loss is only 10%. Because again, there will be a bar. It can go down to within 10%. I've seen it go down between 6 minutes to an hour. And
6 minutes to an hour.
Yes, by 10.
Okay. So that means you've got to be pretty much on the ball, eh?
Yes.
Right. That rules me out. So you'll have to be my manager, Shukri, I think.
They're wild, Geoff. They're wild.
Absolutely. PH, does that kind of fit in with what you were saying? What I'm alluding to, of course, is that when the big boys actually miss the boat, they tend to do that. They tend to drive the market in the opposite direction to get their price.
Well, what was interesting for me, Geoff, was a couple of years ago, Goldman Sachs was talking up Bitcoin, and that was really one of the. It was a point at which Bitcoin was very popular, and then when these investment banks like Goldman and JP Morgan get on board and they make positive comments about cryptos and Bitcoin, then you feel like, oh yeah, okay, these guys are pumping it. But this article, the things that this guy Gary Cohen was saying, it didn't make sense for someone like him, who should know better, to make these outrageous claims about cryptocurrencies and Bitcoin in particular. It just felt like fake news, not fake that he made the comments, but it felt like he was trying to, it was all smoke and mirrors.
Yep.
Intelligent news, PB, so that the rich guys can buy more. Intelligent news.
Yeah.
Yes, it does. It smells a bit to me. I like it. When it smells a bit, I get interested. I like it. All right, Lewis, dollar Swissy. I think I'm not sure if you were in the show. Actually, I think you asked the question on Thursday and in the pre-US session, and I answered it in the US session, for which I do apologize. I didn't realize you wouldn't be in there. This looks extremely bearish to me. And this is pretty much a classic pattern. And I think as I described it, if I go a little bit wider, that's not what I meant to do. Wrong button, horse head. There we go. If I go a little bit wider, this is under the dominant force of a pretty strong chart pattern, in my humble opinion. And I'll point that out to you because it won't be obvious unless you look for what I look for. This is a big double top here, it's also a head and shoulders. And since that neckline broke, it's been sayonara. There's been absolutely nothing going on for this pair. False break underneath this level, which is about the 88, 89 hand or something like that. Came off it again, but now we've rolled back to it. That's a very slow death. It's like death by 1,000 cuts, really. And now it's broken that initial level of what, 89.75 as I've got it. I can only see this going to the next one, which is this level here, which is 87.65. The problem you've got, of course, is it's already gone through that that last support level. So where do you get in is the question. And yeah, cool, Lewis, all good. Let me get rid of the pen again. God, I've got that many boxes open. It's pre-Christmas. There, get rid of that. No, that doesn't work. There we go. Clear that, go to there. So with that big picture in mind, you know, and we're still underneath this long-term major trend line, and that's not going to change anytime soon, in my humble opinion. This level's a to my mind, a fait accompli. I can't see us not going there, frankly, on dollar Swiss. And, you know, if you have a look at now, and nobody's had a look at this today, so I'll briefly bring it up if I can find it. There we go. The dollar index, if you have a look at the dollar index, well, to my mind, you can draw only one conclusion, and that is that it's in deep SH1T. Wow, this is taking a long time to build. Sorry, guys. There we go. And the thing about this chart is it's broken, to my mind, the last line of defense before 89. It's closed below that high. It's closed below that low. Okay, it's the top of the range here. And the good part about that is, for dollar Swissy, is that there doesn't have to be anything, but you would like to see, and you would think there would be some pullback now. You would think there'll be some pullback now. So I think that would be an opportunity to sell dollar Swissy. I cannot go any other way than that at the moment. Oh, I keep going back to this, guys. Remember I said this a couple of weeks ago. Big key reversal bar followed by an inside bar. Sell, 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 sell. If only I had this on my broker, it would be a whole lot better. Anyway, I digress, but that's the scenario I see. And that puts it into perspective for me in dollar Swissy. If we can get a pullback to here, Lewis, I think any pullback is a sell. So that is my opinion. PH, got any thoughts?
About the US dollar, Geoff?
Dollar Swissy.
Well, look, you know, the first chart that I looked at today was the Swiss franc, right, against the Japanese yen. So yeah, I'm pretty bullish on the Swiss franc. The one thing on the Swiss franc that always concerns me is the Swiss National Bank.
Mm-hmm.
They have always had an interventionist, you know, philosophy. So they'll be looking to make their, you know, make their Swiss, you know, their Swiss francs count when it comes to trying to control the price or at least influence the price. And the Swiss franc itself can end up having violent pullbacks against the euro, and then subsequently that, you know, you see that in the against the US dollar as well. So it's just not something that I'm always what's the word? I'm always a little bit anxious about being long the Swiss franc just because of the Swiss National Bank. You never know when they're gonna come in and try to bring the value down.
One thing knowing where their key level is, isn't it? It's another thing not knowing where their key level is.
Yeah, and after a period of strength like this, they're not going to intervene in the markets. They're not going to try to go against the tide. They're going to wait until maybe a horizontal level. They see that, you know, the distribution has stopped and maybe some accumulation has started to occur, and then they'll strike. But yeah, look, the US dollar is just really broken, and that will be another thing in the favor of this, this particular chart in terms of lower prices, I think.
Yep. I think we're all of the same opinion, Lewis. Any pullback here is a selling opportunity, in my humble opinion. So back to there would be awesome. Back to 89.75 would be great, and pick it up there. If you're already in, then get your stops in the right place, which is, I don't know, probably above this level here. If that's probably the most obvious. And then when that does go again, get into it. Righto, guys, that is it for the week. PH, thank you so much. Shukri, thank you so much. As always, we look forward to your thoughts and analysis throughout the week. And we will, of course, be in all the regular shows starting tomorrow with, well, Shukri, I think, is first up tomorrow, 7:15. Is that right, Shukri?
750, yeah, 750.
I knew that. Thanks, mate.
Cheers,
Catch you. Have a great week ahead, everyone. And we will look forward to your company in one of the programs that we put on for you all week. And ciao for now.
Bye, everyone.